What's up guys, welcome back to another video talking about trading setups in the markets, and I have a banger for you. So stick around to the very end of this video as we talk dollar index, gold, indices, and maybe even a little Bitcoin with the Bitcoin market flying high here today. Let's jump right into it. Welcome back to the channel, guys. So I like to start my analysis usually with the dollar index, which is up today and actually retesting this level of resistance that we've been discussing on my channel for a little while, this 104 level, which when we take a look, on the daily chart, you can see this level of red here and red here. These mark areas of resistance that I've got on my chart. And I want to talk about this dollar index move. And, people are maybe wondering, is this going to be potentially a breakout? Is the dollar index going to start climbing here? And in my personal opinion, the answer is most likely it's going lower. Now, of course, when I make these videos, people will always point out when I'm right or wrong, mostly when I'm wrong. That's most of the comments that I will get in reference to an idea that I have.
Incorrect.
But I want to talk about what a trader is. A trader is not a fortune teller or a perfect predictor of the future, and you don't have to be. Trading is all about risk management and using probabilities to your favor. If I'm wrong about this dollar idea, in the grand scheme of things, it doesn't matter, right? Because it's all about making many trades over time with that edge that you're looking for. So in my opinion, this dollar move is becoming a bit extended in a downward trend on the daily chart. And when we pull up the 4-hour chart, yes, you're getting a little bit of a higher low here, but the overall context, in my opinion, for the dollar index is still lower. So when we look at the rest of the assets in this video, that is going to be my lens, my basis is a dollar bearish bias. Now, not just a technical bias, let's talk fundamentals for just a second. This week we have PMIs tomorrow, we also have JOLTS jobs numbers tomorrow, and on Friday we have NFP. And when you look at all those numbers, what we're expecting here is for the labor market to continue to cool down. And if that does occur, it is likely that the Fed, they've already kind of become likely to no longer rate hike. And even now markets are looking to potentially see if rate cuts are coming. So when you look through that lens, that would lend towards a weakening dollar because the economy is slowing down, the labor market and inflation coming down are indicative of that. And overall, again, that would mean for me that rallies are most likely more sell side opportunities. So when we now look at all the other assets in this video, when we take a look at gold and things like that, just remember the bias for me is dollar bearish this week. And again, we've been dollar bearish. We've had some really nice trades recently, but we'll see if that can continue into this week. First of all, I just want to show you some of my own current positions. I am still long the S&P 500. However, it looks like it might be time to test the waters here. So the S&P 500 trade that I picked up at the beginning of November, behind where my camera is, I entered in long, we can actually show you the trade. So entered in long on November 1st, and I've been holding this trade since. This has been a very long duration trade compared to my average, but my stop loss is just below this market structure of support. I'm trading SPY, it's the S&P 500 ETF on the stock market. Due to my limitations as in the US, I want to trade on regulated brokers, so I do so through WeBull. By the way, there is a link down below in the description for WeBull that gets you free shares when you sign up using it. So check it out, especially if you're a US person. Okay, so if price pulls back here, as long as we hold support, I'll stay in the trade. But if we continue to take on water with this S&P trade, I will officially be out for my profit. I took trades on both the S&P and on, I took the S&P trade twice. I took it on VOO, which is another ETF that tracks the S&P, and SPY. This was just me adding to the trade. I bought VOO. So between the two, it's been very good. Let's talk about one that's not starting out well. And it looks like I might actually get stopped out on this. I went long GLD. This is, of course, the gold ETF. And my thought process is I mirrored it on the XAU USD, which most traders are more familiar with. We are very much not doing what I thought it would do. Price pulled back to this area around 2048. Now, I know obviously this looks very stupid in hindsight, and I try and show both my winners and my losers on my videos. So this is my attempt to go long number one. It didn't work out. But if you watch my live stream here today, I have a couple more areas that I'm interested in trying. This was a very small position for me on gold, as you can see, relative to the S&P trade. It's a very tiny position. The reason for that is because I knew that this entry was pretty aggressive and had the potential to rocket back higher, but so far not looking so so good. And by the way, I am still in this trade, just slightly different. Let's see, there it is, GLD. Yeah. So I am still in this trade, barely missed my stop, but by the time you see this video, I very well could have been stopped out, or maybe it reverses, but we'll see. Oh! Anyways, my point with XAU USD is that we had the Asian session start out and rocket higher, right? Putting in a new all-time high. And as we pulled back into this area, actually, let's correct this resistance point here. So as we pulled back, I thought that we would see a little bit more of a reaction from the bulls, but so far we haven't. Now, my second attempt for gold bullish setups will be if we can get a push down into like the 2015 area. And my third attempt will be at the 2000 mark. So if this does get stopped out, I will probably try again here. And if that gets stopped out, I will try again at 2000. So why 3 different attempts? It's because entries are hard, and that's the reality of trading. It's very hard to get a perfect entry, and my stops are relatively tight, so my risk ends up being a smaller amount. However, that often means that I get tagged out of a stop a few times before catching the right move. And I'm okay with that. I accept that as a trend follower. It's sometimes hard to get that right entry. And for me with gold, the goal is to catch the move if it does set up for me. And for that to happen, I may need to enter more than once. So I have a couple attempts that I will be planning on gold. For updates on that, by the way, we will be sharing all of the notifications inside of our Discord group. You can see this is what I shared this morning, obviously not starting out very well, but we are also in the indices trade. So overall, it's been an incredible couple months, but we'll see how this one goes on gold. And again, willing to try a couple times if I need to try and catch the move that I think could be headed next for gold. So in terms of other markets, let's take a look at the Euro USD. So for those of you guys watching Euro, price is seemingly breaking through a level of support here. And in my opinion, this is kind of a zone to zone potentially. If the dollar wants to get strong this week and this candle closes like this for the 4-hour chart on the euro dollar, to me, it seems likely that this will drift a little bit lower to potentially retest some longer term support at this level. Also, I want to show you guys the COT data. Well, first, here's the top setups page for the Edge Finder for today. So we are bullish gold, pound dollar, euro dollar, pretty much everything against the dollar. But of course, a little bit under pressure here today with the dollar pullback. But I still think, as I mentioned, overall trend for the dollar seems bearish. Anyways, dollar Swiss, dollar ZAR, oil, all bearish as well. These are setups there. And then now let's take a look at the COT data. So in terms of money flow for the week to week, if you're newer to my channel, you may be wondering, what is all of this? Well, this is the commitment of traders data that we've built into our UI on the Edge Finder, which is our company's market scanning software. You can find it on a1trading.com or using the links down below in the description. Now, I want to show you something here with this COT data. You've got 2 components. You've got this first section, which is the net positioning. And net positioning shows basically overall how many long contracts versus short contracts, essentially, in terms of institutional positioning that we track through the CFTC's commitment of traders data. Gold is still very bullish, JP225, the Nikkei, dollar, euro, and silver. These things are all very bullish. And then Swiss franc, Japanese yen, the CAD, the Aussie, and the Kiwi still overall pretty net bearish. However, what we pay attention to most on the channel is this secondary area, the money flow section. The money flow section shows you the latest week's data in terms of the commitment traders data. Now, this is the longer term. That first section is like the longer term kind of positioning. This is the latest money moves from institutional flow. So if we take a look at this, the GBP, right, the pound, had a big increase this past week. The Dow had a big increase this past week, and gold had a big increase as well. So really interesting stuff there. By the way, also silver and SPX and euro all had very bullish weeks. But what about the dollar? Well, take a look. The dollar and the Japanese yen, both generally considered risk-off currencies, saw a pretty big net bearish move in the past week. So take that as you will. Same with oil also. So these things saw pretty bearish weeks in terms of the latest filing. So this can be very useful information. By the way, if you guys would like access to a free trial of this software, you can always get one just by going to a1trading.com, as I'm doing here, and just go to Edge Finder trial. There it is, top right. Click that link, and when you do that, you'll fill out the application here. You can get a trial of our software tool and check it out for yourself. Again, just apply there on the website, a1trading.com. In the top right, there's that trial button. And yeah, so I think in terms of overall, guys, we'll still have to watch this dollar index closely as we go into this week. It seems like the dollar is starting out strong, putting on some pressure against other currencies and gold as well. But again, my overall bias is that I think that this runs out of steam pretty quickly and falls apart. Now, again, that is my forecast, but again, I can be totally wrong. So I make that distinction because sometimes people will watch someone on YouTube and overhype their abilities. I'm not a fortune teller, right? Trading is not about predicting the future. It's about using overall, the knowledge and data that you can to make educated guesses essentially on where the market's going to go, and then managing risk appropriately. That's really where things come to roost when it comes to successful trading. With that said, guys, thank you very much for tuning into today's video, and we'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.